For a lot of entrepreneurs starting out, it's having an assistant. At some point, you can't answer every email. And at some point, you can't write over your emails. And at some point, you can't handle your scheduling. You just get completely overwhelmed. You're doing all your tasks day to day. That assistant will help you out in understanding where you need to go, what you need to accomplish, and will take a lot of that off your plate so you can focus on the managing of the business. Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And in this how-to video, I'm going to be discussing specifically the top hires that you need to run and build a real estate business, and in our case, a multifamily business. When I looked at real estate and I started out investing, buying one home, then a triplex, and never really thought about it as a business. Jake and I started out as the I'm a guys, the I'm a mentality. Now you may be asking yourself, what is the I'm a mentality? Very simple. I'ma do this, I'ma do that. How many of you listening have the I'm a mentality? It's really contagious for entrepreneurs when you're starting out not to have the I'm a business, because you want to do everything. You're so excited. You want the business to thrive through you. You're learning, you're growing, you're creating. Unfortunately, at a certain level, IMA starts getting burned out. IMA can't handle everything. And for Jake and myself, it looked like around the 200 unit mark, we started getting burned out. We started growing. We had no systems. We were just overwhelmed. We didn't know what we were doing. And the interesting thing is, when you start out, you need that hustle, that grind, the willingness to do whatever it takes to try to maybe possibly accomplish all of those tasks. I remember that very first deal that Jake and I took over. He would go to the properties every Friday, collect rents, make sure the resident manager was doing what they were supposed to be doing, showing units, even cutting the grass. That was great for one property. But hopefully, as you've been listening to me over the past 10 years or so, I really want you to view multifamily as a scalable business. I want you not only to think of yourself as the operator, but the owner of this business. I don't want you as the owner to get burned out. That's what we see. So as you're building your real estate business, whether it's single family homes, self-storage, I want you to think of three things. I want you to think of people, systems, and culture. And I will tell you that Jake and I, when we started out, we were what you would call parsimonious, frugal. I guess that's just a great way of saying that. We were pretty cheap in the beginning. And I think a lot of entrepreneurs are. They're trying to, they tighten that buckle and not overspend. And that's part of the I'm a mentality. The first thing that I would say to you before we jump into the top hires that you need, and this is going to be a two-part video, because the first part I'm going to name 3 or 4 that are really crucial. And in next week's lesson, I'm going to mention the remaining 3. But when you're starting out, I want you to think of, man, this is going to cost me, let's say, $1,000 to hire this individual. Well, I want you to break it down into what you think it would cost monthly. So it's $60,000. It's about $5,000 a month. If you want to add on an additional $1,000 a month for medical, the healthcare, for any other costs, unemployment insurance, if you're doing a 401k, let's make it $6,000 a month. I want you to take that, monthly and multiply it by 3, and it's quarterly. Because what happens is we see this number of $60,000. We need to generate $60,000 to be able to afford this employee. If you really drill it down and you increment it into 3 months, that would be about $18,000 that this employee is going to cost you for the next 3 months. Are you able to generate at least $18,000 to be able to pay that employee? And hopefully, can you 2x or 3x or 5x, or God forbid, 10x that? and you just generated $180,000 out of that $18,000 investment. That's what I want you to do, not to feel completely overwhelmed and think about what it's going to cost you for the entire year. Break it down into quarterly increments. And what's really cool about that is you measure it, you can manage it. And if you didn't generate at least $18,000 from that employee, then you have the option of saying, I can go an additional 3 months and see how it works out, or I can just cut that employee and I can just continue to do the work by myself. And when I get better and when I know that I can really use that employee to generate the revenue, then I will. But go in 3-month increments and allow yourself the ability to measure it and to manage it and to see if you're getting an ROI from that employee. That's what I would do if I was you. And for us, we started doing that several years back. It took off the pressure. And then we realized, wow, we've been waiting too long to hire employees. And that's the first question that I would propose to you listening. How do you know when it's too late or you've waited too long to hire an employee? That's a very simple question to answer now that I've been through it for so many years. If you're saying to yourself, man, I really need help with editing this podcast or with showing apartments or with helping me with building a website, you're there. You've already waited too long. That's the unfortunate news. It's the good news and it's the bad news because you have that word resistance pop up. And I love The War of Art. I forgot who wrote it. Oh, gosh, we interviewed him several years back, but The War of Art, Stephen Pressfield is his name. Great author. The word resistance comes in. And this is something that entrepreneurs have. Jake and I had this. That word feeling resistance came in. Should we hire? Should we not hire? Is it going to cost too much? Well, put those fears aside. Do the 3-month test. And like I said, if you're already thinking about it, praying on it, if you've really been considering it for a little while, you're probably ready to hire that very first employee. Now, for the real estate business, what should be that first employee? I can speak from experience. For Jake and myself, when we bought our first deal back in 2013, we self-managed. What does that mean? We decided to learn the business hands-on. We were going to manage our properties. We did not hire a property management company. Now, the first thing that you need to do as an investor, you're either going to manage your own properties, which is self-manage, and or hire a property management company. That is probably going to be one of your most important hires. We often talk about buy right, finance right, and the third pillar is manage right. It's crucial to be able to grow NOI and to be able to focus on the operations of the business. How do you do that? The first hire needs to really be focused on the management of the property. And for us, we actually went out and hired a resident manager on that very first deal. That was somebody living on the property. It was pretty cool because we had somebody living on the property. We were paying them. They were there making sure that when Jake couldn't get to the property, they'd open the door up for a vendor to come in. They would collect rents for us if we weren't able to. They were able to show units. They would make sure that the grounds were tended and well taken care of. They sort of acted as our property manager. Now, on our second deal, we ended up using another resident manager because that property had a resident manager. First deal was 25 units, resident manager. Second deal was 36 units. So now we've got about 60 units within 6 months of each other. The second deal had that resident manager as well. And we said to ourselves, let's keep one here. Let's keep this one here. The third deal came 3 months after we closed the second deal. That was 136 units. So within 18 months of Jake and I buying our first deal, we have 200 units. That's when we decided, hey, it's time to go out and hire property management companies. That's what we ended up doing. Let's hire the property management companies because it's really, really important. We wanted to start hiring managers that were going to be inside the office, and Jake was going to manage those managers. Now, it was so important to do that because management is the face of your organization. When somebody walks into the office, if that office is empty, if that office is unresponsive, guess what? And I just read a stat the other day that literally blew my mind, that if you do not respond to a resident inquiry in today's market, within 30 minutes, there's a 70% chance of that resident going somewhere else. The odds drop dramatically. So you're seeing why I'm so focused on property management right now. If you're not managing it, you have to go out and hire the management company to do the work. So that's the very first hire once you start buying real estate. Either you're managing it or you have a resident manager or the property manager. Now, the second one is what Jake would call the bane of his existence. He hates two things in life that I know for sure. I'm sure he hates more, but there's two functions in business that Jake abhors. He abhors editing podcasts. That we stayed on that a little too long. We're a little too cheap for that. And he hates bookkeeping. Now, it was very interesting. When we bought our first deal, I was doing the bookkeeping. He was sending me up the reports every month, and I was doing it on QuickBooks with my bookkeeper. That lasted around 6 months because then we started scaling out, and we soon found out that QuickBooks really wasn't an appropriate program for a portfolio that had 60 units. It just didn't work for us. But it's important for you to understand bookkeeping. It's important for you to, at least understand what a debit is, what a credit is, what an asset is, what a liability is, what an income statement is, what a balance sheet is, what a statement of cash flows is, what a trailing 12 is. You need to understand how to analyze those reports, how to read those reports. But at a certain point, you can hire a bookkeeper for $35 to $40 an hour to help you input all this stuff, to help you create the reports. Instead of you sitting there mindlessly at 3 a.m. in the morning trying to learn QuickBooks. How many of you done that? It was painful. I'm glad that I did it. I'm glad that I understood the mechanics of QuickBooks and linking accounts and getting to understand what all of the different accounts were. But at some point, after we did that, we needed to go out and hire bookkeeping because it's very important. Once again, if you can't measure it, then you can't manage it. If you have certain key performance indicators and you're not getting good data, then you're not running a business and you can't run a business. So focus the second hire as soon as you can. Get somebody to help you with bookkeeping and with accounting, because if you can't analyze and read those reports, how do you know how your property is properly functioning? We had 3 different assets going within the first 18 months. We had to segregate them properly. We needed to have all those reports for each individual property. We couldn't commingle those funds. And thankfully, we hired bookkeeping early on. And I had a pretty good understanding because I already owned a restaurant. I already had a business for years. Jake was newer in this endeavor, and he never really took to bookkeeping. And to this day, he hates bookkeeping himself. He has crystal clear books for himself personally. He just hates mindlessly having to put those numbers in and do the work. He'd rather have the report done. So the second hire, focus on the accounting. Now, when we get back from the break, we're going to jump into a couple other responsibilities that you need to hire out. What kind of legacy are you building for your family? It's not just about money. It's about making sure your values, your love, and your intentions live on through the generations. Happy Money, Happy Family, Happy Legacy is your guide to creating lasting financial security with purpose. From living trusts to children's needs trusts and special needs trusts, we break it all down in simple, family-first language. Learn how to have the conversation right now with your family. Don't wait until it's too late. Protect what matters most and create a legacy that future generations will thank you for. Download your copy today at Barbaro 360. The link is in the description. And we are back. Now, if you want a copy of our Wheelbarrow Profits book, just email me, gino@jakeandgino.com, and I'll send you a free PDF copy. You can learn how to buy right, manage right, finance right. In the book itself, we have a whole checklist of all of the different vendors and people on board that really you should be considering hiring. Now, I jumped into property management early on. That was the very first one. If I really had to start all over, now you're in the business, you're running the business, these are the people that you should have. For me, I had jumped in, and what was really crucial for me after our second and third property, I really got into life coaching. I want to call this next responsibility. I needed a personal coach. I needed a business coach. This is who I needed early on. And it's really interesting that I actually hired a mentorship program, got a coaching program before I started buying properties. Now, a lot of you out there may think that's crazy. I can do this by myself. I can jump in. I had made that mistake already. There's two ways you can learn anything in this world. You can either learn on the street or you can learn in the classroom. From personal experience, learning on the street is really, really expensive. It's time consuming. It's a great way because I'm a kinesthetic learner. I need to do, but I can tell you it took a lot of time away from my journey, and it took a lot of money away. I lost a lot of money on the first couple of deals. That's why for me, hiring that business coach was so crucial and so vital early on. But we didn't stop there, Jake and myself. Once we started buying assets, we hired additional business coaches, scaling coaches, to help us grow the business, coaches to help us raise capital. We needed all of that once the infrastructure was in play. So for me, I think the next hire would be thinking about business coaching, strategy coaching, where making sure that your entity protection is okay. Understanding that, I think a business coach is such an important hire. Now, this last one, before we get to the end of the show, I really want to focus on this because this is something that's important. Because most people, when they get into real estate, they don't really worry or think about the numbers. They just get in, they say, I'm going to buy this property, I'm going to be a landlord, and hopefully one day the rents go up, and all of a sudden I can sell for a profit or I can refinance. But this next hire is crucial. It's an asset manager. For us, when we started out, we were a little, I don't want to use the word convoluted, but it was a little confusing to us because we were property managers, we were managing the property, but we were also being stewards of that asset by asset managing the property. We at times we're combining the functions. The property manager really runs the property, has the customer journey, the customer experience, deals with the tenants, the leases, the day-to-day operation, whereas the asset manager reviews the reports. Hopefully, they're creating the budgets with the input of the property managers. They get the buy-in. They adhere to those budgets. The asset managers are also talking to investors. If you're syndicating and running a syndication business, they're doing webinars. They're building the CRM for that side of the business, whereas the property managers have a CRM on this side of the business for the residents. The asset managers have it on this side of the business for their investors. You need to really delineate the responsibilities between the two. For us in the beginning, it was sort of, mixed up. We were acting as property managers and as asset managers. Once we decided, hey, let's run the business this way. Property management needs to handle the residents. Asset management here needs to really look at the numbers. Are we hitting our NOI projections? Do we have our occupancy rates where they need to be? Is NOI growth there? What does it look like if we're going to raise income this much? Are we going to be hitting those targets? Are the budgets complete? And are we actually at where we set the budgets? Are we above or are we below? And are we having weekly calls with the property management company to make sure that we are in alignment, to be proactive? Asset managers are so important to running your real estate business. Once again, whether you're in multifamily, whether you're running single family home portfolio, whether you're running a self-storage facility, you need asset managers. It's important to have those three. Now, I'm going to give you one more before we end the show because to me, it's important. And this is another difficult one for a lot of entrepreneurs starting out. It's having an assistant. At some point, you can't answer every email. And at some point, you can't write over your emails. And at some point, you can't handle your scheduling. You just get completely overwhelmed. You're doing all your tasks day to day. That assistant will help you out in understanding where you need to go, what you need to accomplish, and will take a lot of that off your plate so you can focus on the managing of the business. An assistant, at some point, you're going to make the same mistake as I said earlier. When do I need to hire this assistant? When you start asking yourself that, and when you start having that feeling of overwhelm, that's when you know it's time to hire an assistant. I'm looking forward to continuing this conversation next week because it's important. There's a bunch of hires that I want to continue along, but these three, to me, these 3 or 4 that I've mentioned are the crux of the business itself. You have the property management, you have the asset manager, you have the business coach, you have the assistant on there, you have the bookkeeper on there. They create the nucleus of the business when you start out. Those are so important and so crucial to going from the I'm a person that I'm going to do this to the person who's, yeah, I need to scale this business and I need to replace myself in some of these functions. I want to thank you for spending part of your day with us here at Jake and Gino. My name is Gino Barbaro from Jake and Gino, and I'll see you on next week's How To. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.